I'm really interested in the fact that you've got holdings in NVIDIA, you're clearly a supporter of the AI theory, but are we looking at a bubble and then you get these sorts of deals?
Well, you've got to look at it two ways. One, in terms of the timing of the deals. If it is a bubble, it's potentially an NPV issue. Is it, are we going to get all this revenue in 10 years' time or 5 years' time? And that's what the market is trying to figure out right now. People try to compare this to the dot-com bubble, etc., but there's a difference here. A lot of the companies who are buying a lot of these products are supported by strong cash flows, free cash flows, which means that there is potential for these revenues to come through, especially if AI demand take-up goes along the lines of what we're seeing in the last 2-3 years.
I mean, none more so have the financial flex than NVIDIA.
Yep.
And it's interesting that NVIDIA, when signing that 10 gigawatt compute capacity with OpenAI, did give $100 billion in terms of support buying equity. Is those sort of circular financing deals something that gives you pause, or do you think that that's part of what the deal needs to be?
No, that does give us pause. You do look at that and say, hang on, this is not clear blue sky. There are some things we need to think of. So that's why the next 2-3 years are going to be really important. Because what we want to see is the return on the capex that companies like Alphabet, Meta, a lot of these big companies are spending to show up. If it shows up, then what you realize is that this $100 billion is not circular, but just the Kickstarter. So that's what we want to try and see.
I mean, you own Meta, and Meta has shown up in terms of generative AI being folded into the advertising model, being able to be built in and bring real revenue to bear right here, right now. But how long are you going to have to wait for Alphabet's bet to really pay off? We already see in NVIDIA, but do you think more broadly OpenAI eventually really showing that productivity is going to gain them in terms of revenue?
So from an Alphabet, from the kind of software company's perspective, we do think that the next 12 months are going to be really important. What you do need to see is not just the return on capex going through, but the revenue growth coming through to support that. In 27, 28, that we are going to see a continued acceleration or at least stability in revenue growth. Without that, it's very hard to see how the market gets really comfortable with the amount of capex that's being spent right now.
I mean, you just said it does give you pause, and there isn't just blue sky when it comes to NVIDIA. So have you just been trimming some of the exposure? Has now been the time to just stay holding pat and not adding to some of the overall portfolio exposure to some of these names?
So we tend to think of in terms of longer term. So what does this look like in the next 5 years? When we look at it from that perspective, the valuation doesn't look extreme at this point in time. It does look at a point, give us a pause in terms of, look, what else do we need to factor in to keep buying more? But at the same time, it doesn't give us any fear that, hey, this is an imminent bubble, as you asked at the start.
Well, on Friday, there was a lot of pause between US and China, and particularly access for some of these companies to rare earths that ultimately are very dependent on China. How much have you been baking that into a supply chain headache for some of the companies you own?
So that's, again, it's a timing issue. So there's two parts. The first part is this become a prolonged issue, geopolitical issue? Then there's a lot of other things that you need to think of, not just the semiconductor companies, but all the FMCG companies, all the other companies that sell into emerging markets and all global trade. So let's set that aside, that this is a solvable problem that gets solved at some point in the time. Then it's a timing issue. Already what the companies are telling us is there's a real supply issue, that they don't have enough computing power. So that means that people who make these chips benefit from any of these supply chain issues, because to them, they get pricing power in the short term. But in the longer term, this gets solved, so it's a temporary issue. So if anything, these sort of market dips is an opportunity that you look at saying, what are the good quality companies that you do know have pricing power that you want to buy into right now?
And what are they, if it's not the obvious AI winners and darlings we've already seen hit $1 trillion?
No, they still remain, as I said, they still remain attractive, but there's a broader spectrum out there. If you look at companies like Delta Electronics, which provides electronics cooling equipment to data centers, you look at Schneider, you look at SAP, which is going to benefit from the fact that AI gets taken up by more and more enterprises. So there's a bigger ecosystem than just the semiconductor companies or just the cloud companies.